Hello, I'm Maria Dawes, and I'm one of the portfolio managers on the private wealth team at Capstone Asset Management. And I'd like to welcome you to another edition of Your Wealth Matters. And I'm joined today by my colleague and fellow portfolio manager, Janet Kimsing. Hi, Janet. Being the end of the year 2021, where did the time go, right? We'd like to round things up by reviewing the year and looking ahead into 2022 as well. Maybe, Janet, you can talk to some of the themes that we saw last year.
Hi, Maria, and sure thing. So it's been a very eventful year, to say the least. Going back to the beginning of 2021, honestly, now seems almost a lifetime ago, right? But I do think it's worth revisiting the past, as this can often give us an indication as to where we're going. And as sick as we are of talking about it, we have to talk about COVID, because whether we like it or not, this virus surely has impacted us globally. As with 2020, we faced similar headwinds as we underwent renewed lockdowns and restrictions, which were imposed by our government earlier on in the year. This impacted our economies to a large degree, and one will unfortunately likely continue to do so for some time, I believe. And one of the measures we've seen out of the Canadian Central Bank has been these massive amounts of stimulus and this ongoing accommodative position. So while the significant monetary stimulus and increased government spending has stimulated the economy to a certain degree, is that going to be enough to dig ourselves out of this economic hole? And what is that going to look like going into 2022 and beyond? It's going to take some time, and it's going to be slow moving, that is for sure, and also predicated on the virus and our government. So it's a wait and see situation as to be expected. Maria, another big theme of 2021, which we see continuing for 2022, is inflation. Can you comment on that?
Yeah, of course. So it's a much talked about topic for sure. And I think earlier on in 2021, the experts were explaining that inflation is transitory, which means temporary, and circumstantial based on a number of factors. Now, we can say without a doubt that supply chain disruptions have played a big part in fueling inflation, with some of these higher costs for food and natural resources being passed on to consumers. However, now sitting at the end of the year with inflation running very hot, well above its 2% target, I think it's becoming a bigger issue at play. And while the central banks have remained steady on their narrative that inflation levels will drop over time, I believe it is being underplayed in terms of the timeline. And these continued inflationary fears, whether they're real or perceived, I think are going to push interest rates higher sooner. And also bond yields will go up, which will result in capital losses in bond portfolios. And this is another good reason why it's important to have the inclusion of non-traditional or alternative strategies in a bond portfolio, right? To help protect portfolios from being too vulnerable to interest rate changes. So we've touched on central bank stimulus measures, inflation concerns, and Janet, totally switching gears here a bit. How about that snap election?
Yikes. Yes, that was something else. Let's just say that. And yes, definitely a noteworthy event of 2021. As Capstone President and Chief Investment Officer Glenn Murray noted in our last video commentary, the outcome was anticlimactic and an exercise in futility. And I have to wholeheartedly agree. And the big question mark Glenn also pointed to as an ongoing area of concern is real estate affordability. At this point, it is difficult to see how much will change from any policies out of the government, given their focus on adjusting demand versus supply, which is where the main problem lies. So there's still a lot of uncertainty, as well as to what will happen to our housing market going forward. However, it is unfortunately the inconsistent decision-making alongside this lack of transparency, which has certainly added an unnecessary level of risk to the marketplace during an already uncertain landscape that we are required to operate in.
Yeah, speaking of real estate, since the initial impacts of COVID, housing prices have increased significantly throughout Canada. Now, the expectation is that ongoing inflation will eventually lead to higher interest rates, thus driving up mortgage costs for potential homeowners. And this will actually cool the market a little bit because, as you know, traditional mortgage rates on homes are based on the prevailing bond rate at the time. And if these go up, so will the mortgage rates. But the big outstanding question is, how much will housing supply and demand imbalances mitigate the rising mortgage rate risk? What I mean is, Even if lending rates increase, is the shortage of housing supply and the really hot demand for housing going to just steamroll over any corrections that might have happened with changes in interest rates? Maybe these rate changes won't be enough to cool things off overall or after all. So this is, I think, a really big outstanding question, and the answer is going to play out in 2022, I think. Okay, Janet, so where are we at now at the end of the year?
So we continue to witness labor shortages, supply chain disruptions, and that has translated into higher costs. And this could be cause for concern going into 2022. But having said that, as job vacancies diminish and production ramps up, we do expect some companies' inventory numbers to refill over time. And on another positive note, the hope is that as travel bans continue to be lifted, this could act to jumpstart certain sectors, including the service sector, such as the tourism and airline industries.
Yeah, and hopefully we can get some renewed insights from Glenn in January of 2022. But for now, we wish you a fond farewell as we close off the year. And honestly, with COVID, murder hornets out here, and intense flooding in BC, I think we are ready to move on to the new year.
That is absolutely true. So we wish you a very Merry Christmas and Happy New Year. And thank you for joining us on another edition of Your Wealth Matters.